Hey guys, Sadi from eClat Financial here. In today's video, we're going to be discussing quarterly taxes for entrepreneurs, 1099 workers, and small business owners. The main takeaway from this video today is how can we avoid IRS penalties and getting those notices, utilizing and taking advantage of what the IRS calls the safe harbor provision, and how to keep more of your cash working for you. So the reality for self-employed individuals, 1099 workers, and small business owners is there are no withholdings for your taxes. What does that mean? Think of working for an employer if you ever had a job before. Normally, you'd get your paycheck and you'd see your gross pay and net pay after withholdings. Every period as an employee, your taxes are withheld and remitted to the IRS. Whereas for a business owner, you are the employer slash employee. So you are responsible for remitting your tax payments. Now, the IRS knows that remitting it every 2 weeks would be too burdensome. So they developed something called a quarterly estimated tax payment schedule. So the IRS expects you to pay your taxes as you earn your income on a quarterly basis. These due dates are April 15th, June 15th, September 15th, and January 15th normally. Now, if you miss these payment deadlines, the IRS imposes penalties and interest, and these things start stacking up really, really fast. What does it cost to not prepay quarterly? Effectively, it's about a 13% effective fee based off the taxes you owed for not prepaying quarterly. So the underpayment penalty is 0.5% of the taxes due per month and an annual interest rate of about 8% charged by the IRS. So this is a really expensive mistake. Oftentimes, I'll see business owners and self-employed individuals, they'll leave their money saved in a high yield savings account earning 3%, but they don't make any quarterly tax payments, not knowing they're actually paying 13% in penalties and interest. So that's a guaranteed yield on your money. So again, if you don't prepay quarterly, essentially you're paying 12 to 13% of your tax balance. So if you have a $10,000 tax bill by the end of the year and you didn't prepay anything, you're looking at having to pay about 11,200 to 11,300, an extra 12 to $1,300 that could have been avoided had you prepaid quarterly. Now, the IRS knows that estimating your taxes owed can be burdensome, so they developed something called the safe harbor provision. Now, you can avoid any penalties and interest as long as you pay 90% of the current year's tax bill or 110% of last year's tax bill if your income was above 150,000 or 100% of the prior year bill if it's under that. So again, for the safe harbor provision, you can avoid any penalties and interest as long as you pay within 90% of this current year's tax bill quarterly or 110% of last year's tax bill if your income was above 150,000. This applies even if you owe at year end, and I will discuss how this could help you shortly. So again, why does this matter? You don't have to perfectly estimate your tax bill. You just need to hit the safe harbor rule. This gives you control and flexibility on how you prepay your taxes during the year. Understanding the safe harbor rule can help you avoid unnecessary penalties while also keeping cash flow more predictable. How do you calculate the safe harbor? You would just pull your prior year tax return and look at line 24, total tax owed on line 24. If your AGI was less than 150,000, it's going to be that same amount. If it's above 150,000, I want you to multiply that line 24 by 110%. And then we're going to divide these payments into four. So if you owed, we'll use the earlier example, $10,000 in taxes last year, and now you have to prepay $11,000. You want to prepay $2,750 every quarter. This way you hit the safe harbor rule. And now if you, let's say your income 20x'd and you actually owed $100,000, but you prepaid 11, you have no interest or penalties because you hit the safe harbor. That extra $89,000 that you're going to pay in April, you put towards work for you, and now you're earning a yield. That $89,000 is actually earning interest or getting reinvested back into the business during the year. Because why would you overpay the IRS and give them an interest-free loan? Does it make sense when you can go ahead and earn a yield? I'll give you an example. So there's a client, he's an Amazon seller. In 2024, the taxes he paid was $80,000. Now his income is exploding, and now his estimated tax bill is looking at to be around $320,000. As long as he prepays $22,000 every quarter, he would have hit the safe harbor provision, and that remaining fund balance owed that he's going to pay in April, he keeps in his business bank account or in a business savings earning 3-4%, again, as to giving the IRS an interest-free loan. Client two, for example, he's an S corp owner. Last year, he had a tax bill for $120,000. As long as he prepays $132,000 quarterly, I mean annually, by the quarter that would be 33,000 a quarter. He hits the safe harbor, and now this year his tax bill is $500,000. That excess $380,000 was sitting in a high yield savings account the entire year, earning 4%. That's over $12,000 for this individual. So you can see how the safe harbor can be leveraged into actually earning a yield, and why it's so important to know what the safe harbor is. And again, this is the strategy I was discussing earlier. For paying your estimated taxes, you want to make sure that you pay only the safe harbor amount. You hit the IRS minimum. You don't overpay the IRS because you're giving them, that would be giving them an interest-free loan to get your money back when you file later in the forward year. You keep the excess cash and you reinvest it back in the business to earn a better yield. Or at the very least, you put it in a high yield savings account and you're earning 4%. This puts your capital to work, and this is an opportunity cost that you would lose by overpaying the IRS. Where would I put the excess cash? Think small again. If you're someone that's not so risk tolerant, you want to put the funds in a high yield savings account. Treasury bills are a great option because they're state tax exempt depending on where you are. Maybe this makes sense for a New York City resident. Uh, Money market funds also great, very liquid, and it's nearly risk-free. Or you could have some short-term liquidity with a higher yield locking up in a T-bill, a certificate of deposit, something of that nature. And you can kind of mix allocate it. So if you want to take this even a step further, what you would do is track your financials monthly, meaning all your revenue and all your expenses, so you know what your net taxable income is on a month-to-month basis. You allocate 25 to 35% aside every single month into this high yield savings account. And then you only remit the safe harbor provision. So once you know you remitted or you hit the safe harbor, maybe redeploy the cash back into the business, keep it in the account to earn some interest. This way, and at the very least, you just pay the taxes on when you file the following year. So just to recap, the cost of getting this wrong, if you don't pay quarterly and you're someone that just says, I'm going to figure out come tax time, I'll pay everything in one shot, you're paying an extra 13% on that tax bill. Versus if you get it right and you follow the safe harbor, you are avoiding that 13%. If you're not spending 13%, that means you made 13%. And on top of that, you're earning a yield on the excess cash. So the total swing in your favor could be even more than 15% versus waiting to pay in one shot when you filed your tax return, as to knowing your numbers, prepaying quarterly and hitting the safe harbor provision, and allocating any excess back into your business or reinvesting it strategically, and at the very least, earning an interest yield to get some income. And if you're not doing this, you are overpaying or getting penalized. This is one of the many strategies I do for my clients. If you need help optimizing your tax situation and you're tired of overpaying, you can book a free call on our website. Consultations are always free. Everything to gain, nothing to lose. And to learn more about me and my firm, you can visit our website, follow us on Instagram or LinkedIn, and always feel free to email us and we will get back to assist in any way we can. Thank you guys.